Hey everyone, welcome back to Future Finance Lab, where we make AI markets and the future of finance simple for long-term thinkers and beginners. Where we make AI markets and the future of finance simple for long-term thinkers and beginners. It seems like every single day, all we hear about is NVIDIA, AI chips, and the race to find the next NVIDIA. But here's a little secret from market history. When everyone crowds into the exact same idea, the real long-term opportunity often quietly moves somewhere else. So in this video, we're going to look past the obvious and break down the second-order winners of the AI boom. These are the picks and shovels plays working behind the scenes, the data centers, the power companies, and the cooling and networking firms that make the entire AI revolution possible. If you want to understand where the AI money might flow next, hit that like button and let's dive in. First, let's talk about why chips might be getting a little bit crowded. Think about NVIDIA for a second. It has become the absolute poster child of AI. It's in every major index. It's in countless ETFs. It's a top holding for hedge funds, and it's in almost every retail investor's portfolio. Now, when a stock becomes that widely owned, a couple of things tend to happen. First, future expectations get priced in incredibly fast. The market is already assuming massive growth for years to come. Second, because of those high expectations, even really good news sometimes isn't enough to push the stock much higher. The bar is just set so high. Now, let me be clear, I'm not saying chips are a bad investment. I'm saying they're the obvious ones. To understand what comes next, let's use a classic analogy, the gold rush. Back in the 1800s, thousands of people rushed out to California to dig for gold. You know who got rich? It wasn't most of the prospectors. The real money was made by the people who sold them the shovels, the pans, the tents, and all the supplies. Those businesses made a fortune no matter who actually struck gold. In today's AI gold rush, the chip makers are the prospectors, digging for digital gold. But the real infrastructure, the buildings that house the servers, the electricity that powers them, the cooling systems that keep them from melting, and the networks that connect them, those are the modern-day shovel sellers. Think about it. If AI workloads keep growing like everyone expects, they have to run somewhere. They have to be powered by something, cooled by something, and connected to everything else. And that's where our second-order themes come into play. Let's break down the three key AI infrastructure themes. First up, data center REITs, the landlords of the AI world. Instead of making the chips themselves, these companies own and operate the specialized buildings where all the AI servers live. We're talking about massive, secure warehouses filled with racks of servers, with redundant power systems and high-speed fiber optic connectivity. The core idea here is simple. As AI models get bigger and more complex, cloud providers and large companies need more and more data center capacity. That means they need more square footage, more megawatts of power, and more interconnection between different networks. For beginners, a couple of important things to know about REITs or real estate investment trusts. They are legally required to pay out a large portion of their income to shareholders as dividends, which can be great for income. Their revenue often comes from long-term contracts with major tenants like Amazon, Google, and Microsoft, which provides a level of stability. With data center REITs, you're not betting on which AI model or chip company is going to win. You're simply betting that someone somewhere is going to need a place to host all of this new AI computing power. Now for our second theme, power and grid plays. Who keeps the lights on for the AI revolution? AI data centers consume an absolutely enormous amount of electricity. Training a single large AI model can use as much power as a small town. In some regions, the electricity grid is already hitting its limits. New data center projects are actually being delayed simply because there isn't enough available power capacity. This creates a powerful, long-term story for a few types of companies. We have the utility companies that need to build out more power generation and transmission lines. We have companies that are repurposing old high-power facilities, like former crypto mining sites, and turning them into AI compute hubs. And there's a growing interest in reliable, 24/7 power sources to ensure these critical data centers never go offline. The big idea is this: if AI is the brain, then the electrical grid is the circulatory system. Without power, there is no AI. It is that simple. This isn't a guarantee of quick returns, but it is a fundamental structural demand driver that could last for decades. Our third theme is the plumbing of AI, cooling, and networking. Modern AI chips like NVIDIA GPUs run incredibly hot and draw a massive amount of power. This means that traditional air cooling, the kind you might have in a regular office building, is starting to struggle. This is where advanced solutions like liquid cooling become essential. The companies that design, install, and manage these sophisticated thermal systems are becoming absolutely critical. Then there's the networking side. AI isn't about one server working alone. It's about huge clusters of thousands of servers all talking to each other at lightning speed. To do that, you need ultra-low latency, high-bandwidth connections. The interconnection hubs that act as the central meeting points for data, linking cloud providers, enterprises, and internet networks, become the central nervous system of the AI ecosystem. In other words, cooling and networking are the invisible plumbing that allows AI to actually function at the massive scale we were talking about. Without them, you just have a collection of very hot, very expensive, and very disconnected computer chips. So how do we put all this together? Let's use a simple mental model to think about it. Please remember, this is not financial advice or a recommendation. It's just a framework to help you think about balancing your exposure to the AI trend. Imagine you have 3 buckets. The first bucket is for the chips and direct AI plays. These are the obvious winners we talked about, like the big semiconductor names and the leading AI software companies. Their role in a portfolio is typically high growth, but that often comes with higher volatility. The second, and much larger, bucket is for infrastructure, the enablers. This is where you'd put the data center REITs, the power and grid names, and the cooling and networking companies we just discussed. Their role is to capture the broad structural growth of AI with potentially less direct volatility than the chip stocks. This could be cash, broad market ETFs like an S&P 500 fund, or other non-AI sectors. Its role is to provide stability and reduce overall portfolio risk. A sample framework, just as a thought exercise, might look something like this. Maybe 30% in the direct chip and AI leaders, 60% spread across those different infrastructure themes, and 10% in cash or a broad market index. Again, I cannot stress this enough. This is a thought exercise, not a portfolio suggestion. Your personal risk tolerance, your time horizon, and your own research are far more important than any template you see online. The key takeaway is to broaden your thinking. Don't just ask, what's the next NVIDIA? A better question might be, what absolutely has to exist if AI is going to keep growing for the next 10 or 20 years? So to recap, the chip stocks have grabbed all the headlines, and for good reason. But the long-term, durable AI story also relies on the data center landlords who provide the space, the power providers who keep the lights on, and the cooling and networking plumbers who connect it all together. Remember, this video is for educational purposes only and is not financial advice. Always do your own research, and if you need to, talk to a qualified professional before making any investment decisions. If you found this breakdown helpful, please hit the like button, subscribe to Future Finance Lab for more content like this, and maybe share this video with a friend who only owns chip stocks. And now I have a question for you. Which part of the AI infrastructure stack do you think is the most overlooked right now? Is it the data centers, the power grid, or the cooling and networking? Drop your thoughts in the comments below. Thanks for watching.